that, as we head to count down the end of trade, we're joined by Ambareesh Baliga and Anand Tandon, as well as Sudarshan Sukhani, who returns to the show. Gentlemen, to all three of you, a very warm welcome. Anand, let me start with you. Did you think that today's run-up to 64.15 was overwhelming, underwhelming, or just as expected?
Well, that depends on what's the expectation you went in with. I thought the market had already kind of, factored in that there would be a fairly good victory for the opposition. And, the results have kind of fallen in line, though I think Delhi was a bit of a negative surprise from a point of view of BJP winning seats. But that said, I think, if the market had done anything more, it would have set itself up for even bigger, sell-off. Because obviously, nothing changes dramatically just because something changes in the state elections. And especially in a case where, except for Rajasthan and Delhi, the other two states are already being run by the BJP. So really not much has changed.
That's an interesting one, Anand. So are you saying that the market should brace themselves for a minor correction, 3 to 4% correction going forward?
Well, I continue to believe that what drives market eventually, of course, day-to-day fluctuations aside, but eventually is earnings and valuation. What exactly will change, because, the Rajasthan government is now in the hands of, the BJP, or Delhi may see the BJP government fall, being set up, in terms of either companies earning more money or, more money coming into the system. I think in both cases, nothing much will have changed. Really speaking, if you want to see even policy changes, you have to wait till the Lok Sabha elections come through and see what results come there. Even assuming that the Lok Sabha elections signals a change and you get a majority from BJP, which is viewed to be more market friendly, it will take them at least another 6 months to put policies in action. So any run-up before that, has to be with the hope rather than with actual numbers. And actual numbers will take a much longer time to come through. So, if there is too much hope in the market, it's probably time to take some money off the table.
Ambareesh, let me take off from where Anand said, because are we running ahead of ourselves? With the example of one share, L&T. Now, everybody has agreed that we are going to see the investment cycle come back. It will take at least 12 to 18 months for the investment cycle to pick up again. L&T is running up way ahead of that. How do you view that share?
Like I've been saying earlier, the markets will move on hope as compared to fundamentals if you're talking of the next 5 to 6 months, because this is an important event and there's an expectation of a change of a government for a better tomorrow. So based on that, I think we have just entered the second phase of the rally, and I think this will continue for the next at least foreseeable 5 to 6 months. With this, do we mean to say that like the markets will run up 20%? I don't think so. In fact, we are looking at levels of about 6,800, 7,000 over the next 4 to 6 months. But it is mostly the mid caps which will outperform in this market.
But Ambareesh, hope is not a data point. What exactly would then trigger this rally towards 7,000?
No, that's what I said. People will not really look at data points for this rally to continue, because, like I said, this happens once in 5 years. So clearly, based on that hope that we'll have a better tomorrow with a strong government at the center, you will have this rally continuing. But yes, I think in the longer run, clearly it's the fundamentals which will play out. So possibly, if you're looking at life beyond the next 6 months, yes, I think we'll again come back to look at all the data points, look at as to whether new government will deliver or not. I think it'll come back to that. But till then, I don't think those data points will have a major bearing on the market.
Anand, if I could just ask you about, given your skepticism about new market highs, whether you are sort of convinced by what many brokerages have been recommending today, which is buy in cyclicals and stay away from defensives. Is that how you'd play the market between now and, let's say, election outcome 2014?
So let me just say that I'm not skeptical about new market highs. All I'm saying is that for the next March, the market is fully priced. If you assume that the earnings will grow by another 15% or a little more maybe for the next year, then maybe you have a 15 to 17% upside from here over the next 12 months. None of which will happen because of any policy change or any political change that has happened. It will happen because earnings come through. And if that means that the market will go up to a new high, of course it will. That's a statistical, it's just a number after all. If the earnings double from here, markets will also double from here. There may be times when they will fall, but that's a better time to buy. So I'm not at all debating whether we'll go into a new high. We certainly will. The only question is that is there any reason for you to change your view on whatever you were doing so far? And the answer to that to me is no. Because one state in Rajasthan doesn't make any difference to the overall economy of the country.
Which means you're
Now,
saying a no to the shift
cyclicals,
from defensives to cyclicals as well.
Well, I'm saying that the reason for cyclicals to go up is the assumption that you will get a revival in the capex and a revival and a drop in interest rates. My argument is today there is more than 7 lakh crores of capex stuck. What is likely to happen is that a decent policy environment will allow those capex to be completed. I do not see too many new companies coming up and announcing new capex plans. In fact, if you really look at it, the capex pipeline should be falling from here, not rising. And secondly, the interest rates for them to fall is highly unlikely in the near term. In fact, if you actually see inflation coming down, real interest rates will start to rise. And that is going to take away a whole set of incentives that the corporate sector has been getting for the last 5 years, where we've had negative real interest rates. So you have to get to a situation where you get positive real interest rates first before you start seeing a decline in interest rates. You have to be a little more careful about cyclicals. That said, right now the momentum is towards cyclical because that's the most beaten down sector. So if you look to buy, you go and put money into cyclicals.
So, Sudarshan, would it worry you that we had a gap up and we actually never managed to go above that and we are closing below that, or is it just a side issue right now?
No, the gap up was quite large, and if we are not crossing that threshold, it doesn't make any difference. So that's not a cause for worry. We did the same after the exit polls, but see where we are now. But the bigger message is that all the news is now in the markets. This market will now work on liquidity, on QE, on earnings, results, and all of that will also be affected by the fact that we are at very lofty levels. So I would assume that this market has done its bit on the upside, while the overall trend is up. There's no doubt about it. The near term could see much more choppiness and even a correction, and that correction may not be just 3 or 4%. It could be much more.
Alright, just about 15 seconds left for market closing. If you are a skeptic, you would say that there were more declining stocks than advancing stocks in today's trade. The advance decline ratio was actually negative in today's trade. But today was a good day for the markets. Let's talk about the leaders. It was led by large cap. The top 6 stocks contributed about 50 points out of Nifty's 90-point move. That really was the story of the day. So if you look at the stocks like ICICI Bank, we look at Larsen & Toubro, HDFC Bank, Reliance, 4 of these stocks in fact were the big gainers. Even ITC did well in trade. HDFC, Mahindra & Mahindra, ONGC, big move on ONGC, closing above 300 and closing above its 200-day moving average, so that looked good. Really, it was across the board. Couple of stocks where you saw some selling pressure were Jindal Steel and Power, and some defenses like Cipla, Lupin.
Actually, a bulk of the pharma stocks were down. Cipla, Lupin ran back. See, all 3 of them were lower, and Tata Steel was lower as well in trade today. Kane down, BHEL down, and BPCL closing with minor losses as well.
Indeed, and some of the global cyclicals, global commodity plays were doing well. Sesa Sterlite was up 5%. ACC and Ambuja, you may want to call them commodities, were up about 5%. So Hindalco was up about 2.5%. So that cyclical shift was quite clearly working out, but there was a bit of mid-cap underperformance in today's trade, though that will not reflect in the top traded stocks because a lot of them were large caps. But 2 or 3 mid-caps which stand out. Shipping Corporation, in general there's a bit of a wave in PSU stocks, so 10% higher on Shipping Corp, and Oriental Bank of Commerce, which was up about 8%. These were some names that stood out in today's trade.
Well, Anand, a quick word from you. We've had the markets in a tizzy since the morning on the hopes that the BJP will come back with 200 plus seats. I know you track politics also pretty closely. What's your estimate?
Well, I think you have to keep in mind that the states that went for the polls this time were all states where BJP already has a strong presence. As I mentioned, MP and Chhattisgarh, they were already a ruling party. In Rajasthan, we've had a flip-flop for a long time, and in Delhi, the showing has not been great. Of course, you have to give them credit that at least in I think 5 or 6 seats, they did not win only on less than 1,000 votes. But even assuming they had worked a little harder, they may just about have made a kind of majority there. The key question would be what happens in UP and Bihar. I don't think that the rest of the states, especially in the south, they don't have much presence. In the northeast, they don't have a presence. So those are the two swing states. I very much doubt that unless you get a very, very big swing in UP, which will be a surprise given the regional parties that are already there. I think you'll still have to look for a coalition government. Now that said, I don't think coalitions is bad at all. In fact, all the growth we have seen, and I've repeated this in the past as well, all the growth we have seen in this country has happened after we've stopped having a single party in power. Till the time that we had a majority, there was a 3 or 4% growth. When we've started to have coalitions, we've had greater growth, and all the states have benefited from there. So I don't see a problem from having a coalition. It's just that, will they reach closer to 200, in which case it will be a strong coalition, or if it is, closer to about 160 or thereabouts, then you still are a little iffy there.
Anand, you spoke of improved earnings, in the quarters to come. Where do you see opportunity in terms of investment? Today we had a bunch of brokerages talk about stocks like, for instance, Tata Motors, Tata Steel, which may no longer be in as much favor. Stocks like Sesa, which are coming back in favor to some extent. So notwithstanding the cyclicals versus defensive theory, where do you see opportunity if the economy is picking up?
Well, first of all, we haven't yet seen the economy picking up, right? It is still pretty much, up in the air really, that you'll see an uptick, because if you look at the data points, none of them have shown any substantial uptick so far. The earnings growth this time has been a little better than the first quarter, but overall for the first half, we are still at 5-6%, and I don't see that going to double digits anytime soon. So we still have to wait, and which means that the market is running ahead of itself. Don't forget, take a company like Larsen. Larsen has started to look at order book from overseas markets and not local markets, which essentially means they are pushing their margins down. What does that tell you about the state of the economy here? As I mentioned, there is a huge expectation that capex will increase, and from what I hear, the government has been telling all the PSUs that they have to go out and increase their capex. Now, the market celebrates the fact that BHEL is going out and trying to bid for a UMPP in Odisha. Really, I mean, just think about it. Here is a company which is supposed to be making the machinery that goes into a power plant, not running the power plant. What is the point of having an NTPC there? Soon you will hear NTPC setting up a second BHEL. So clearly there is lack of strategy. The fact that BHEL feels the need to go and so-called forward integrates tells you about the state of their order book. So I think, if you have to really look for safety as well as earnings, you have to look for export-oriented companies. And if you want to look at cyclicals, I think public sector banks is probably the best bet, because there you would actually have the hope that over a 2-year cycle, the fact that they're trading at half-time book value may give you an upside as the economy does change maybe a year from now.
So Darshan, we've been speaking about L&T. How's it looking on the charts? Been a big move today. L&T and ICICI Bank. You've taken those two shares.
Yeah, L&T, I would not be a buyer in L&T. We've been looking at it as a momentum stock and not as a long-term opportunity. That will stall. ICICI Bank has been a favorite. I think after a normal cooling off, the private sector banks will renew their advance, and banks, as they are outperforming, will continue to outperform. So yes to banks and ICICI, but thumbs down to L&T.
Ambareesh, the hope trade is playing out in PSUs, stocks like ONGC, HPCL, BPCL. How would you play some of these stocks?
In fact, been positive on oil marketing companies for quite a while, especially HPCL, which again I had recommended, I think at about 180, 190. Still continue to be positive. In fact, I had a price target of about 270, 280 for that stock, and that continues.
In terms of mid-caps, Ambareesh, you mentioned that you thought that the run-up in the markets from here to, let's say, April, May next year could potentially come on the back of mid-cap gains. You have a list of favorite stocks?
Quite a few stocks, but then ones which are more or less on the top are in the infra space, ILFS transportation, then cap goods like Cotton Reeves, Voltas, auto ancillaries like Excite, which has just started moving, which I was recommending again. Last week I recommended, I think that's also started moving up. So these are, some of the stocks in addition to the normally the ones which I've been recommending in the past, like banks in the private sector. We've been recommending DCB and IndusInd.
And a quick last question to you, Anand. Do you have as much conviction in the mid-cap space? Any specific opportunities that you may want to list?
Well, I think right now what's driving the mid-caps is the fact that they have got a half a dozen mid-cap funds which have been launched, and therefore there is sudden revival of interest. If your view is, as my aim is, that you will see a taper soon, I would think, you need to be a little careful there.
All right, gentlemen, we'll thank you very much for your time. And with that, we're going to head into a quick short break on Closing Bell. Back next, we'll have all the top stories with Sumaira. Headlines coming up.